Hello, everybody. Welcome. This is Accounts Receivable Part 8. We're going to do a comprehensive example over the period of 1 year. So let's go off to our Google Sheets. Okay, so right over here. So we have on January 1st, 2024, ONT had a beginning balance and allowance for doubtful accounts of $5,000. On July 1st, we wrote off an accounts receivable. On August 24th, on August 1st, 2024, we collected a $20,000 receivable that had been previously written off. And over here, post adjustments above, the AR balance was $400,000. We estimate that 20% of our AR would not be collectible. And let's go ahead and start it up. So over here, our accounts receivable balance post all of any other types of adjustments. Our ending AR balance is $400,000. Okay. And we're being told that 20% of our AR will not be collectible. So the first step that we're going to go through and do as we kind of walk through in terms of our overview is we're going to go ahead and do the step one, which is determining the ending balance in the allowance for doubtful accounts. So right over here. So our ADA, our ending balance is going to be 400,000 times 20% or $80,000. So we have 400,000 times 20%. And right over here, we estimate that our post adjustments, our AR balance was 400,000. ONT estimates that 20% of its AR will not be collectible. So over here, our ending balance in the allowance for doubtful accounts is going to be 80,000. For our balance sheet presentation, we're going to have assets and we're going to have current assets. Remember, accounts receivable, something we're going to be expecting to collect in the coming year. That means it's a current asset. So we're going to have accounts receivable less our allowance for doubtful accounts. This is going to give us accounts receivable net. So right over here, we've got our AR, which is 400,000, less our allowance for doubtful accounts, which is 80,000. So our accounts receivable net is going to be $320,000. So let's go ahead and do our step two. Our step two for this question is we're going to go ahead and input in our beginning allowance for doubtful accounts balance. So our beginning balance in the allowance for doubtful accounts was a $5,000 credit on 1/1/24. Now, let's go ahead then and deal with these other parts. We're going to prepare the journal entries for July 1st and then for August 21st. Now, really important, even though we are going to be adjusting accounts receivable, this AR balance is post adjustment. So when we're doing these, we're only going to be dealing with the allowance for doubtful accounts. So let's go ahead and get it started. Okay, so whenever we write off a receivable, okay, so over here, our date. So when we write off an account receivable, what we're going to do is we're going to debit our allowance for doubtful accounts, which again, this is a contra asset account, but when we write off an AR, what we're going to do is we're going to debit the allowance for doubtful accounts and we're going to credit accounts receivable. So right over here, this is how I write it off. It never changes. But over here, it's really important that I look over here on 7/1/24 is how does this impact my allowance for doubtful accounts? And this is going to be the write-off of the account receivable. Now, over here on 8/1/24, so we're doing letter C. We've done the ending balance for the ADA. We've prepared the balance sheet presentation for accounts receivable. Now we're doing the journal entries for these two dates. Now over here on 8/1/24, we have to do two things. First is we are collecting a $20,000 account receivable that had been previously written off. So when we collect this, we're going to do two steps. The first thing we're going to do is we're going to reinstate the receivable by debiting AR, crediting the allowance for doubtful accounts. So we wrote this off in 2023, and we're now collecting it in 2024. So our first step is to reinstate the receivable. Our second step is to collect the cash. So we're going to debit cash and credit AR for that 20,000. So how does this impact our allowance for doubtful accounts? Well, my allowance for doubtful accounts is being credited by $20,000. So what I'm going to do is over here, I'm going to go over here and credit the allowance for doubtful accounts on 8/1/24 for the $20,000 for the AR that had been previously written off. Very important. This $400,000, the problem tells us that this is post adjustment. So this has already been affected by whatever this was over here. We're just doing this over here for our allowance. Now, the very last step that we're going to go through and take when we do these problems is our very final step, right? We've done beginning balance. We've done our step 2, which was recorded. Sorry, we do our ending balance first. What's our beginning balance? We wrote off an AR. We collected an AR previously written off. Our last step is going to be to record bad debt expense. So over here, what I'm going to do is to say, all right, my bad debt expense is going to be 12/31/24. The way I record it is always going to be a debit to bad debt expense. I'm going to credit the allowance for doubtful accounts. And one of the things that I did, I was about to do a video on this, but I've actually done it enough times. So again, whenever the very last step, when you do these questions, and I did it in some of the previous examples, and that's why I didn't really do it here, but our last step is to go through and record this. Now, when I look at this, what is going to balance this out over here? Now, you always will see me go through and do this as an equation. 5,000 plus 20,000 plus X minus 7,000 equals 80,000. The allowance for doubtful accounts, whatever I credit this amount for over here, is basically going to be the amount that I'm going to be recording as my bad debt expense, right? So over here, right, my balancing entry for the allowance for doubtful accounts, it's always the final step. So over here, you've got 5 plus 20,000 minus 7,000 plus X equals 80,000. So this is going to be 18,000 plus X equals 80,000. X is going to be equal to 80,000 minus 18,000. X is going to be equal to 62,000. Now, what I always want to do is, does it work? 5,000 plus 20 plus 62 minus 7 gives me 80,000. So this actually goes through and works. So this is how I go through and record bad debt expense. And this is how I go through and do this more so of a comprehensive problem within a period of a year. So I want to thank you for joining me here today. And I look forward to seeing you on the next video. If you have any questions, please feel free to leave them in the comments below. Appreciate you liking and subscribing to the videos. And I look forward to seeing you on the next video. Have a great day.